Right. Well, move over now to the U.S., where the stock index futures pointed to a flat open today as traders eyed the release of data and comments from Fed Chair Janet Yellen. Yellen is set to give opening remarks at the Federal Reserve System Community Development Research Conference in Washington, D.C. at 8:45 a.m. Eastern Time. And market watchers will be keenly awaiting any indications on the trajectory of the economy and rates. Thursday, we'll see initial jobless claims released at 8:30 a.m. Eastern Time, with new home sales set to come out at 10 a.m. In Asia, markets closed mostly higher today after U.S. equities ended mixed ahead of a key healthcare vote in Congress seen as a proxy of U.S. President Donald Trump's mandate. Japan's Nikkei 225 wavered for most of the session and fell below the 19,000 mark, but closed up 0.23%. The Australian ASX 200 finished up 0.41%. The Kospi index ended up 0.2%, or about 4.4 points at 2,172.72. Mainland Chinese shares finished flat to positive. The Shanghai Composite closed up 0.11%, and the Shenzhen Composite was nearly flat at 2,038.59. And away from the market in Tanzania, the central bank has cut the minimum reserve ratio required of commercial lenders to 8% from 10%. Now, the latest monetary easing measure aimed at reducing borrowing costs and stimulating economic growth. The change to the statutory minimum reserve requirement will take effect on April 20 and follows the bank's decision 2 weeks ago to slash its discount rate to 12% from 16%. Bank of Tanzania Governor Beno Ndulu announced the measure in a circular to commercial banks dated March 21. It will apply to both domestic and foreign currency deposit liabilities. The International Monetary Fund warned earlier this year that the slow pace of credit growth posed a risk to Tanzania's growth forecast of around 7% in the fiscal year 2016-2017. The fund advised Tanzania to ease monetary policy and boost public spending on infrastructure projects. And here in Nigeria, of course, at the debt market, the bond segment of the market closed on a bearish note, with 67% of traded bills coming under pressure. Average yield expanded by 25 basis points to 16.52%. Also, investors were downbeat in the Treasury bill space, with average yield moving northwards by 15 basis points to 17.08%. Our Central Bank of Nigeria offered about 228.02 billion naira in Treasury bill auction on Wednesday, and same amount is expected to mature today. Let's talk to a fixed income dealer at GT Bank, Chioma Udu, for an update on that. Good afternoon, Chioma. Thank you very much for joining us.
Good afternoon.
So what is the outcome of the Treasury bills auction conducted on Wednesday?
Oh, okay. The outcome, we saw yields inch up by 20 basis points on the longest end of the call, 364. There was not a lot of subscription like the last auction. And then we've seen today's market, we've seen a lot of selling in the market due to the liquidity shortage we have in the market.
So with the same amount being offered on Wednesday and expected to mature today, talking about liquidity, what would this mean for the market in terms of liquidity?
For liquidity, we've seen a lot of banks trying to hold liquidity due to the consistent intervention, FX intervention into the market, so you not be caught unawares. So we've seen a lot of selling at the short end of the court to fund the liquidity required for daily running of business and FX.
So where is the yield as we speak?
Right now, we've seen yields on the bonds at 16, average at 16, and then the short end of the curve 17, with more selling in the market.
All right, thank you very much for your time, Chioma. Chioma Udu, fixed income dealer with GT Bank. In Egypt, that government is targeting $9 billion in foreign financing in the 2017-2018 fiscal year. The financing will be divided between $3 billion obtained from debt markets and $5 billion to $6 billion from international finance institutions. Egypt agreed with International Monetary Fund in November on a $12 billion three-year loan program to support government efforts to reduce its budget deficit and balance its currency market. The finance minister said last week he expects Egypt to receive the second tranche of this loan, expected to be $1.25 billion in May or June. Egypt is also expected to receive additional tranches of loans from the World Bank and African Development Bank in 2017-2018, which together would total $1.5 billion. And Uganda says it has asked China for a $500 million loan to help build almost 600 kilometers of roads in the country's oil-rich west amid criticism over heavy borrowing that has ballooned the country's debt. Uganda has discovered an estimated 6.5 billion barrels of crude reserves on its Albertine Rift Basin along the border with the Democratic Republic of Congo. However, lack of infrastructure such as roads and an export pipeline, as well as disagreements between the government and international oil companies over taxes, have repeatedly delayed production. Uganda wants to start oil production in 2020 when a pipeline through neighboring Tanzania is set for completion. We take a quick break now. When we return, we'll look at the commodities market. Do stay with us.